Bruce McCain, Chief Investment Strategist at Key Private Bank, which manages about $20 billion in assets, joins us on the program. What are you seeing there, Bruce? Are you seeing that the rally has gotten ahead of itself?
Well, we think the rally has gotten ahead of itself. We also think that the economy is a little bit ahead of itself, in the sense that we clearly have seen much better retail sales, much better manufacturing, a variety of economic statistics. But we think it reflects things like the postponement of demand out of the supply shortages last summer into the winter and into the early spring. It also reflects an exceptionally warm winter that has magnified the effects of retail sales and some of the other statistics we've seen. So our concern is that as we get to the more normal weather months, as we lose the additional demand from last year, some of the economic statistics may not look as good going forward. On top of that, investors are exceptionally enthusiastic, and that means that they're probably ahead of themselves as well.
Yeah. Okay, I was going to point out that consumer confidence is back up at a 4-year high, so consumers want to spend again. And also, what about the jobless claims? Isn't this pretty much echoing what we're seeing for the payrolls and non-farm payrolls as well? Is that, yes, it's been slow, but jobs are being added back to the U.S. economy?
Absolutely. We are making progress. That's the good news. The progress, however, is not coming as fast as we really need to have it come if we're going to drive a strong recovery. The other problem, too, is that incomes are going up, but taxes are going up faster. On an after-tax basis, people are not keeping up with the increase in spending, and that means they're rolling up a bunch of credit that may not be sustainable in the long term either.
Now, Bruce, you know, we're hearing the U.S. Treasury Secretary sounding really upbeat in terms of where we are in terms of the recovery. We're already, he says, back up above the pre-crisis levels. Is that true?
Mm-hmm. Yeah, I think for the most part we are reaching levels where finally we're breaking above some of the tops that we set before. It depends upon the statistical series, but clearly the idea that we would go into a double dip from this is losing credibility with each passing day.
Okay, well, what do you do in the markets then? It sounds like you're cynical on where the recovery is going and these gains in the markets.
We do think that longer term, as we look to the end of this year or the first part of next, that we could be well into a recovery at that point. But we think at this point it's premature. We think that the markets are ahead of themselves, not fully reflecting the advantages we've had from that postponed demand and the warmer weather. And so we think there's room for disappointment through the middle part of the year. With prices hitting new highs and investor enthusiasm at multi-year highs, we think that that spells the potential for a fairly significant pullback. And if and when we get that sort of pullback, we'll take a careful look at the economic fundamentals and decide whether or not we need to be allocating some more.
Okay, Bruce, okay, be specific with me. What are you holding right now? What are you looking to buy, looking to short, et cetera, et cetera?
We have a very, very low exposure to overseas assets. We do still have some positions in the emerging markets, and we'd look to leverage back into that on some signs that you're starting to see progress in economic recovery in that region. We're more skeptical about Europe. Instead, we have positions in Canada or Asia ex-Japan in the developed world, and we have quite a few positions in the U.S. at this point as a haven for flight to safety. We also have some additional bond exposure compared to what we normally have and a little higher cash level. So we're trying to hold some powder dry and be prepared to act if we do get a substantial pullback.
Okay. Bruce, thank you so much for your time this morning. Good to see you once again. Bruce McCain.